Hi everyone, let's go over my micro Elliott Wave scenarios on Bitcoin, starting with this low. As actually from an Elliott Wave perspective, this low is very important as it increases the probabilities for eventually a continuation to the downside, and I will explain why by going through the different micro scenarios. If I then start with the zigzag scenario, we were looking for a 5-3-5 wave move where the most common target for wave C is between the 1 and the 1.236. However, in this scenario, wave C almost reached the 1.618, which is a rare target for a wave C. And if a wave C gets very close or hits a 1.618, you always have to think, might this be a wave 1, 2, and then a wave 3 scenario, so an impulsive scenario to the downside. But in this scenario, this is then a wave C and then a 1, 2, 3, 4, 5 wave move to finish this wave C over here. But that then leaves us with this structure, because if this is the end of a zigzag scenario in an ABC and we want to see a continuation to the upside in an impulsive structure, you want to see a wave 1 followed by a corrective wave 2 and then eventually a wave 3 to the upside, where this wave 2 is not allowed to take the low of the origin of wave 1. However, in this scenario, we took the low over here, right? We took the low. So basically that means that in this scenario, this cannot be an impulsive structure to the upside. And this is still part of then a bigger corrective structure where this is potentially only the beginning as an ABC. And then this is maybe an expanding flat type of scenario where eventually you get a bit more corrective structures before then a continuation to the downside, only because price has taken this low. So this cannot be the beginning of an impulsive structure. If we then look at an impulsive scenario to the downside, we're then looking at a wave 1 followed by a wave 2. Then we have a 5 wave move over here and then a wave 3, where the most common target for wave 3, or at least a minimum target for wave 3, is around the 1.618, which it almost hit. Then we have a wave 4 and then a wave 5, or this wave 4 is not yet finished. And the move that we have to the upside over here is part of an expanding flat ABC, where the maximum target for wave 4 is the 0.5, which is sitting at 27.3k. The moment candles are closing above the 0.5 is the moment that this still being part of a wave 4 is going to be very unlikely. And also if price is going to move towards the upside and hit this level at 27.5k, then this potential wave 4 is going to enter the price action of this wave 1, which invalidates this still being a wave 4, because also the high that we already made yesterday over here could be the high of a wave 4. The 0.382 got very nicely respected, as you can see, and we actually also had a daily naked point of control at that level at 27.150, so that was quite nice. And these fibs are taken from the high of 2 to then the low of wave 3, 382 respected, common target for a wave 4, for then potentially this move to the downside already being part of a wave 5. The problem I have though with this low being the low of a wave 5, of course it is possible because we took the low of wave 3, so it's absolutely fine. However, the targets for a wave 5 have not been hit. So the first target for a wave 5 is pulling a fib from the low to the high of 3. And then putting on the 1.236 and the 1.618. And you can see we actually just missed the 1.236 over here. And this area is the most common target area for the end of a potential wave 5, where actually the 1.618 also has nice confluence with this target box between 26.2k and 26.3k. So an interesting area of confluence where we have a daily naked point of control and a time naked point of control at that area. Another way to look for the low of a wave 5 is to take the trend-based fib extension from the high of 1 to the low of 1 to then the high of the potential wave 4, and then put on the 1-to-1. And the 1-to-1 again is inside the target box, and price hasn't hit the 1-to-1. And then another way to check a target for wave 5 is to go with the trend-based fib extension from the high of 1 to the low of 3 to the high of 4. And then put on the 0.618, which again is below the low that this wave 5 has made at the moment. Now, and if we then go to another one, you can actually pull a channel as well. So if you pull a channel from the high of 2 to the low of 4, and then eventually to the low of 3, then potentially the low of the channel is also a target for a wave 5. So these are 4 ways to check a target for a 5, but as you can see in all 4 of these scenarios, this low over here did not reach any of those targets. So that's why I'm thinking that this wave 4 might not yet be finished, might still be in the making basically for then another move to the downside. If, however, is if this is the high of a 4 and this is the low of a wave 5, just imaginary, right? Then this is an impulsive structure. This is a 5-wave move, and a 5-wave move is never a standalone move, which means that if this is a 5-wave structure, it has to be part of either this being an A, B, C, or a wave 1, 2, and then bigger downside in a wave 3. So the invalidation is taking the high over here at 28.5k, but if this is an impulse, you always expect another, at least one more impulse to the downside, because a single 5-wave move cannot stand alone in Elliott waves. You always need a 5, 3, 5 minimum. So if we then go to a scenario that might increase the, I guess that will lead to higher prices, basically, is a potential WXYXZ scenario. Now, first of all, I like to say that this is a rare, very rare pattern, corrective pattern as well, where we then have a 3-wave in a W, 3 waves in X, and then basically all the waves are 3-wave structures, where the most common target for wave Y is the 1-to-1 from the high to the low of W to the high of X, which, as you can see, has quite nicely been respected. The only issue I have a little bit with this wave Y over here is that this has to then be a ABC, so a zigzag in a 5-3-5 wave move, and then this wave C, so the second structure of this ABC, is very, very long, as it reached the 1.618 again, which is a rare target for a wave C, and that's not really something I like to see. Then you have this X over here, where this wave X didn't reach the 0.382, which is usually a minimum target for a wave X, and you can see it missed out. And then you have this wave Z, where the most common target for Z is between the 1 and the 1.236. So besides the fact that the WXYXZ is already a very, very rare pattern, there's also a couple of things about this pattern that are not really increasing the probability of this being the correct one. However, after a WXYXZ, you expect continuation to the upside and then an impulsive structure for the ones that count this move to the upside as an impulse. So if you count this as an impulsive structure, then this is a corrective structure, and then you expect another impulsive move to the upside, right? So this is the reason why this low is so incredibly important from an Elliott wave perspective, right? Because in summary, in a zigzag, you expect a continuation maybe to the upside in an impulsive structure if you want to see much higher prices, but the fact that price now took the low invalidates a potential impulse in a 1, 2, 3, because wave 2 is not allowed to take the low of wave 1. So this is then still corrective, which means that eventually you're gonna see lower prices. That does not mean, by the way, we cannot take this high, because if we open this over here, I want to show you that we can also have this as a 3-wave structure, then get another 3-wave structure, reach the target box up here, which is between 28.9k and 29.2k, and then have an impulse to the downside in a wave C, creating an expanding flat, which is a 5-wave move to the downside. So this high can very much still be taken, even though we might be in a corrective structure, right? If, however, you get now an impulsive move to the upside where you have a direct move to the upside, then yeah, maybe we have to think about higher prices. But first, this target area, this box of resistance has to be passed. So let's go back to what I was saying. So in an ABC, the fact that we took the low is a sign of a corrective structure. If we are talking about an impulsive structure, then this can potentially still be the low of 5, or the low of 5 might still be in the making. So then we do something like this, right? And that is fine as well, but then you still expect more downside to come, because an impulse is not a standalone move. It needs to have a retracement before another impulsive move to the downside, and then at least a 5-3-5 scenario. And a WXY is first of all very rare, and there's a couple of things going on that are not that great in this scenario as well. If we then go to the CVD divergences, then yeah, we have bullish CVD divergences over here. We have a higher low on price, but a lower low on the CVD, which I'll show you over here. So if we go to the 1 hour, then we have a higher low on price, but on the yellow line and the blue line, we have lower CVDs, which is a bullish divergence where the target is taking this high, which is another reason why I think that potentially an expanding flat scenario, which then is 3 waves to the upside and then another move down, can actually be very, very interesting, because then also the bullish divergence is playing out. However, it's always important to realize that local CVD has priority. And if we go to the local CVD divergences, yesterday yesterday I went in depth about what happened over here, so I won't do that again. But we did have bearish divergences that now played out. So we had the bearish divergences over here, lower high in price, higher high on the yellow line CVD, bearish divergence, target being this low, price moved to the downside, took this low, so the bearish divergences have played out. And if we look at the moment what is happening, then price is moving to the upside. Throughout this move towards the upside, there is no bullish divergences to be seen, which is not necessary, right? It's not necessary, sorry for that, to see bullish divergences, but eventually having maybe a bit of a retracement and then creating some bullish divergences would be nice. But what you now can see is if we think about this still being a potential wave 4, for eventually a wave 5 to the downside, what is interesting is that with this high again, look at the yellow line, right? Again, we still have a lower high and we get this move to the upside, lower high on price as it stands now. But again, this yellow line is creating a higher high. So again, we have some bearish divergences going on, and these will only be invalidated if price is going to take this high. So if price is going to push up and take this high, then the bearish divergences that we have over here are invalidated. But as it stands now, price again created bearish divergences where now the target is going to be this low over here at 26.5k. And I think that if price is going to move to the downside, this target area, right, is going to be very interesting support. So yeah, we have to wait and see what happens from a CVD perspective. And we also have news today. So if we go to the news and I quickly refresh my browser over here, then we are on Friday, 2:30 p.m. So we got high impact news today, as you can see. So make sure at 2:30 p.m. Central East European time, by the way, you might want to check your own time zone. Make sure you trade safe around these hours. I hope this video was helpful or valuable to you. Please check out the most recent educational update I've done about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.